Is Michael Burry shorting Apple stock? Burry also plans to sell 3 stocks in 2022. In case you don't know, Michael Burry predicted the subprime housing bubble in the mid-2000s and the following market crash. He then led the charge ahead of the meme stock investing frenzy in GameStop. He even bet against Elon Musk's Tesla. So now, what's Michael Burry's reason for betting millions against Apple? Keep watching to find out. A document on the Securities and Exchange Commission (SEC) website revealed on May 16th that Michael Burry of The Big Short fame is shorting Apple with put options on 206,000 shares. The 13F document disclosure has caught the attention of investors who understandably keep an eye on Burry's activities in hopes of gleaning a bit of market wisdom. Business Insider reports that through his private investment firm Scion Asset Management, Burry bought stock for Alphabet and the Meta platform owned by Mark Zuckerberg, in addition to his surprising huge bet against Apple, which was at one point the most valuable company in the world. When Burry makes a move on the market, every trader and finance investor pays close attention. This time, once again, Burry is puzzling the financial sector, leaving them wondering what he sees that they don't. In contrast, Fool reports that renowned investor Warren Buffett has strengthened his position by buying more Apple shares. As two iconic and highly influential investors who have very different styles go different ways, many are wondering who is making the right move, Burry or Buffett. Stephen Wright, writing for Fool, has an interesting answer. They are both right on the money. Wright explains that Buffett is a long-term investor, while Burry shorts stock on short-term plays. Buffett is not in the business of predicting company stock prices, but invests in companies that he believes have business value down the road. Burry, on the other hand, is looking at what Apple will do in the near future. Inflation, supply chain issues complicating the technology sector, China's COVID-19 lockdowns, and the performance of Nasdaq are bound to affect Apple stock in the short term, or so the idea goes. According to Business Insider, Burry has been open about his vision of the market, claiming the greatest speculative bubble of all time and all things is inevitably leading to the mother of all crashes, with investors piling up on cryptocurrencies and dabbling in meme stocks. Burry's put options on Apple shares give him the right but not the obligation to sell shares at a certain price at a certain time. Burry's bearish position is valued at around $36 million. If he exercises it, that would be the largest position in his portfolio. Apple stock had a big run, quadrupling its price since early 2019. However, by May 2022, the company's stocks had dipped as much as 20% since early April. The Cupertino company saw a 16% drop in the stock price in this past quarter alone. Burry's portfolio reveals his confidence in the U.S. market. He slashed it from 20 holdings to just 6 in the third quarter of 2021, with a value that dropped from $140 million to $42 million. In the fourth quarter, he swapped 3 of his remaining 6 holdings, lifting his portfolio to $74 million. Burry tweeted on April 27th, "Short sellers on a stock have nothing, zero, zilch, nada to do with the success or failure of the underlying business." Apple, as with many companies around the world, was hit hard by the COVID-19 pandemic and the resulting disruptions it introduced into the supply chain. In October 2021, the company announced a record fiscal fourth quarter with $83.4 billion in revenue. However, that wasn't the full story, as Apple CEO Tim Cook had revealed in a statement to CNBC at the time that ongoing supply chain problems had cost the company billions of dollars during that same quarter. Although there's no reason to assume Apple's long-term outlook is anything less than great, it is possible these issues, combined with a general economic downturn expected to reduce consumer spending, may result in a bit of a stumble for the company in the more immediate future. Burry's decision to bet against Apple seemingly indicates he sees the potential for it to experience an atypically large split from its historic value. Though short of him laying out his thoughts in public, this remains speculation. Due to his track record, it seems as though many are content trusting him based on his confidence alone. All the while, less valuable stocks for companies that don't depend so heavily on consumer spending may become more appealing until the last pandemic's economic ramifications are well and truly behind us. At the beginning of the video, we talked about 3 stocks Burry is wary of and intends to sell this year. Let's take a look at these 3 stocks. The chief of Scion Asset Management, who held large stakes in companies like Alphabet Inc., Meta Platforms Inc., and Discovery Inc. during the past year, also addressed famous tech-related names like Tesla, Netflix, and Twitter in his tweets. In a series of tweets, which have been deleted in typical Burry fashion merely hours after they were sent, the hedge fund manager noted that Tesla rivals would catch up to the firm, pointing to Netflix as an example to back his assertion. Streaming giant Netflix Inc. reported disappointing first-quarter earnings in April and also disclosed that it was losing subscribers, sending a shockwave down the entertainment industry and leading to a dramatic drop in the share price. Burry claimed that the competition came for Netflix just like the competition is coming for Tesla in a tweet. Burry had shorted hundreds of millions worth of Tesla Inc. stock last year and engaged in a public battle with Tesla Inc. founder Elon Musk. The latter referred to the former as a broken clock in a tweet in November 2021. More recently, Burry has cheered on Musk and his recent decision to purchase social networking platform Twitter Inc. In a since-deleted tweet from late April, Burry said that Musk taking control of Twitter after pledging to prioritize free speech would be good for the U.S., and that Twitter Inc. had previously restricted the sharing of disputed news reports that were later verified. Burry has also compared the bulls at the market to the reporters sharing positive news about the stock market a day before it crashed, leading to the Great Depression in 1929. Well, that's all for this video. Hope you enjoyed this one. Thanks for watching.